The first is the settlement statement. This is just breaking down the credits, the debits that are to the buyer and the seller. And this, the title company is going to send out to the real estate agents as a rule of thumb first to make sure that we haven't missed anything. We'll talk about this in title tips as well, but sometimes there's an addendum to the contract that changes something as far as terms on the sales price, maybe the closing cost credit, maybe a home warranty has been added for different reasons throughout the contract to close process, and we want to make sure that we encompass all of those before the seller or buyer sees that settlement statement. It's always hard to go backwards from the settlement statement once you get one out there. The seller's like, well, wait a minute, the other one didn't have a home warranty. Yeah, it was kind of missed. So if we can catch those by the title company and by the real estate agents taking a look at those, we just all look better to the client and making sure we're giving them the best product possible. So you'll see on the seller side on the left, I'm not going to go through every single detail, but just I'm going to point out some things. Of course, our sales price. If that changes throughout the process of the closing, make sure that the lender and the title company receive those addendums changing the sales price. That's definitely hugely important and the basis of what we use for doc stamps, for title insurance, and of course the calculations. Prorations are prorated as well, homeowners associations, CDDs, and taxes. Seller paid closing costs are another thing that you'll see on the settlement statement. Sometimes you'll see them as a bulk. Like in this situation, it's $12,000 credit. Other times, lenders do require that we break down those $12,000 and how they were allocated. So actually, the closing costs will move from the buyer side to the seller side, totaling that $12,000 or the max that the lender will allow. Sometimes we have to do it both ways, where we give a lump sum of a portion, and then other closing costs have to be moved, especially on FHA and VA non-allowables. So those are shown a little bit differently. If you ever have questions when you're reviewing the closing statement as to what the total closing costs were if they're not in a lump sum, never feel bad asking, never feel like that's not a good question. It's absolutely a good question. And the title company can give you a breakdown of what lines are included in that total to make sure the seller is paying what they should be paying and the buyer is getting a credit for what they should be getting a credit for. Continuing down on the buyer side, you'll see the loan charges start there. And every loan is a little bit different. Depends on the type of loan, the down payment, the loan program that the buyer has signed up for. So those closing costs will be broken down as well on the buyer side. And so we'll flip it to page 2 now of the settlement statement and continue on in the closing costs.
And I'd love to throw out, I don't know, again, we all know Mickey Mouse and Minnie. And I don't know if everybody noticed, but that's our example on the settlement statement. And I just, look, I think we all know Mickey and Minnie. They got a little bit of a nest egg over there in Orlando and in other parts of the world. I mean, $500,000, that seems a little low. But again, that's just my opinion. So I would maybe they're buying a small little vacation. Yeah, true.
Yeah. Who knows? Yeah. We never assume on those, or maybe they're buying it for their kids. I mean, maybe they're just being good parents. I mean, who knows? So, all right, we'll continue. That's Chris's comic relief. So, luckily, you're going to get some knowledge today, not just comic relief. So, all right, we'll keep going. So, as you continue down the buyer side, again, that's breaking down the closing cost. Prepaid interest is paid current through the first of the following month. And the reason for that is it pays the interest that's due. So in this situation, the payments would begin in August. And when the borrower starts their payments in August, they pay their July interest. So interest is paid in arrears. You have to borrow the money before you can pay the interest on it. So you'll see that prepaid interest of $592.12. That's the reason. That's also the reason that there's a myth in our industry of closing on the last day of the month, because the buyer only has 1 day of interest as opposed to, in this situation, half a month of interest. I'm going to encourage you, if you have an option, to not close on the last day of the month, because everyone and their mother, brother, and sister close on the last day of the month. So if things change at the last minute, the walkthrough lasts a little longer and you call the title company and need to just move the closing time by an hour, they may not have that availability. As opposed to 3 days before the last day of the month, they're going to have a little more flexibility. Also, if there's an issue at closing, the lender's going to have a little more flexibility with getting that improved. Movers, insurance companies, the whole 9 yards are going to have a little more flexibility as opposed to the end of the month. It's not as bad as it used to be, but it seems that we still have that myth in our industry as far as closing at the end of the month. And I will tell you, for customer service sake, it does allow a little more flexibility with clients to not close on that last day unless it's absolutely needed, and sometimes it definitely is. Impounds in this situation are being established for the buyer. Most loans that we close do have an escrow account, which is where the impounds are established, the homeowner's insurance and the taxes up front. The next set of charges are the title charges. That is the loan policy, the owner's policy, search fees, closing fees, and that's all per the contract agreement, making sure that the buyer is receiving owner's title insurance covering them of the loan, or the sales price, I'm sorry, and that the lender is getting a loan policy as well. The next paragraph, or the next little part of our settlement statement, is the commissions. I would encourage you highly to look at this as soon as you get that settlement statement. The most embarrassing conversation I've ever had in a closing room is to talk about commission in front of the seller and buyer. Although they may have agreed to a transaction fee, or they may have agreed to this commission at the beginning of this process, if it is not accurate on this closing statement, it is an embarrassing conversation for all, and we want to make sure that we are getting that accurate information on that settlement statement. So definitely look at that, make sure it's the right percentage, make sure that if there is a transaction fee or an additional fee that you or your company charges, that is listed on that closing statement, so that when we're sending that to the seller and buyer to review, again, it is accurate. All right, keep going to the next page. And this breaks down the recording fees. There are doc stamps that are paid on the deed, doc stamps that are paid on the mortgage, and then, of course, recording of the deed and the mortgage. The deed being the document that conveys title from the seller to the buyer, and the mortgage being what's recorded in public records to place a lien on the property for the new loan that the borrower is borrowing. So those are paid respectively. The seller typically pays the doc stamps on the deed. The buyer typically pays the recording fees and the doc stamps and intangible tax on the mortgage, but that's all per the contract. So that's what we abide by as far as who we charge those fees to. The next is the payoff. In this situation, we only had one mortgage. Sometimes the buyer or seller has two mortgages. Sometimes they have even three mortgages. We don't see that as commonly as we used to, but a first and second is not uncommon. So those payoffs will be there listed. We do collect per diem, which is the per day interest, in order to make sure those are paid off timely and paid in full. And then the miscellaneous charges are things such as homeowner's insurance, lien search, survey for the new property boundary survey, any estoppel fees, any home warranty. If the seller had agreed to buy a home warranty for the buyer, that would be listed under this section as well. So we make sure that that is all taken care of and charged through closing. And then the very bottom, you'll see what's due to the seller in this situation is the $332,197.28. And then what's due from the buyer is $156,757.25. In most scenarios, we do require a wire from the buyer. If there's a small amount that the buyer owes, $500 or so, we can take a check that we take on a case-by-case basis. And wiring instructions will be received from our company only through our portal. If the buyer is not able to access that, or maybe is on the road, or those situations, we do have workarounds that we'll do on a case-by-case. Maybe when they're at the bank, we'll fax them over to the bank directly. There's just such wire instruction email fraud that goes on in our industry, so we do not email wiring instructions. Also, as the agent, I would never send wiring instructions to your client directly. There has been hackings that have happened, and agents been pulled into some liability for that. So allow the title company to do that. Definitely call us if the buyers do not have that, so we can make sure we're accommodating that request directly to your buyer and confirming those wiring instructions. And then the last page of the settlement statement, page 4, will be where everyone signs. And you will receive a copy of the fully executed settlement statement as the agent. You'll need to keep that for your records, and most likely your real estate office will require a copy of that as well. So they'll need that for processing, just to show the transaction has closed and we will provide that with your check. We can either email that or whatever you need. We also wire commissions directly to the agent, so if you have a disbursement authorization signed by your broker, we can handle that for you as well to make sure you're receiving your commission timely. There are some requirements to that disbursement authorization, so if you have any questions on that, just get with us and we can make sure that the format that your office uses. Some companies use this on a daily, so this is the standard. Some do not, so we'll be more than happy to talk that through if needed. All right, so that is our settlement statement. The great thing about seeing our settlement statement is that we are close to closing, we are finalizing everything, and we are almost done with the transaction for the seller, the buyer, and of course the agents.
So for everybody in attendance, so if you want, in the chat feature, we'd love for you to type in just the letter. So question time. So who prepares the settlement statement? So either type A for title agent, B for lender, C for clerk of the courts, or D, Mickey Mouse.
It is the title agent, and that settlement statement comes from many different sources. So as the title agent, we're putting, of course, what's on the contract, what we found on the title search with the title commitment. We're including the payoffs, lien search, any additional payoffs that need to be done, HOA estoppel. We're pulling all that information together, and then also the lender's figures and fees that they have as well. So there's a lot of pull together of information for us to prepare that final settlement statement. But again, if you have a need for a prelim or an estimated based on where we're at in the transaction, please feel free to request that specifically to that transaction. Of course, we have our app, so you can pull quotes and those kind of things. But if you need specific to that transaction, just communicate that to us and we will accommodate that request as soon as possible.